All right, today we're going to look at the entire world of commodities through a completely new lens. Welcome to what we're calling Commodities 2.0. This is a world where the fight for resources, well, it's not just about building bigger cities anymore. It's about locking down your dominance in a new, much more competitive world. Okay, so this quote, it's probably a little jarring to hear, right? For years, the whole story around critical minerals like lithium and cobalt has been all about green energy, electric cars, saving the planet. But what if that's not the full picture? This quote is really our jumping off point today, a provocative idea that kind of flips the entire narrative on its head. And that really leads us to the central question of this whole explainer. We're going to dig into the idea that getting your hands on these raw materials has really moved beyond just a smart corporate move and into the world of geopolitical survival. Is a country's real power now measured by its control over these elements? So this first section is all about framing this new reality. We're not talking about a traditional war with tanks and soldiers. Nope, this is an economic and strategic battle, and it's being fought with supply chains, with tariffs, and with control over the absolute building blocks of all modern technology and defense. So here it is, the core argument, laid right out. The main thing driving demand for these minerals is no longer just the, admirable goal of building a sustainable future. Instead, it's something much more raw. It's the urgent, pragmatic need for nations to secure their own tech and their own military independence in a world that's, well, it's fracturing. And this is the key distinction you have to understand. The common view, the one you've probably heard a million times, is that things like lithium and cobalt are green assets for EV batteries. But the emerging reality, the one governments are now scrambling to deal with, is that these are fundamental defense and security assets. I mean, just think about it for a second. Advanced military communications, semiconductors, next-gen weaponry, all of it depends on these exact same materials. So, how does all this fit into the bigger picture? Because, of course, none of this is happening in a vacuum. It's all part of a much larger geopolitical chess match, a sort of great game for the 21st century, where resources are the most important pieces on the board. And this timeline really shows it's not just one thing. It's a whole cascade of events. You have rising global tensions that create this atmosphere of distrust, and that, in turn, fuels trade disputes and tariff threats, especially between the US and China. Now, what's wild is the scale of this. These two economies make up over 40% of global GDP, so when they start pulling apart, it sends these massive shockwaves through the entire system. And the result? Supply chains, well, they're not just about efficiency anymore. They've been turned into weapons. And this image really drives home the kind of leverage we're talking about. It's one thing to talk about a trade war in abstract terms, but here you can see the actual physical choke point. China's dominance in refining these minerals means it could, theoretically, disrupt the production of everything from an F-35 fighter jet to a Tesla, just by turning a dial on the processing of these raw materials. Okay, so now let's zoom in. Let's go from the grand strategy to the materials themselves. What exactly are the arsenals of tomorrow made of? And I think the answer here might actually surprise you. For 100 years, we've thought of steel as the backbone of military might, right? Tanks, ships, all that stuff. And yeah, it's still important, but from a strategic point of view, its relevance is being totally eclipsed. The real fight is over minerals you might have never even heard of. For example, in the US, only about 3% of steel demand actually comes from the defense sector. The real vulnerabilities, they lie elsewhere. This table, this is really the heart of the matter. Just look at these numbers. China produces 98% of the world's gallium. That's essential for advanced semiconductors and military comms, 60% of germanium, which you need for chip-making equipment. And as we've already said, they're the key refiner for the big battery metals, lithium and cobalt. This isn't just a simple economic advantage. It's a strategic chokehold on the entire global high-tech and defense industries. And if you're thinking, okay, but this is all just a hypothetical threat, well, it's not. This has already happened. When the US put controls on chip exports to China, Beijing fired right back by restricting its exports of gallium and germanium. And the reason they gave? National security. This is the clearest signal you could ask for that the resource war is already underway. Okay, so understanding the why is one thing, but for anyone watching the markets, the next logical question is how, right? How might you get some exposure to this whole theme? Well, let's break down the two main paths you could take: ETFs and individual mining companies. So first, a real quick primer for anyone who might not be familiar. An ETF, or an exchange-traded fund, is basically just a basket of assets. You can buy one single share of an ETF, and suddenly you've got exposure to a whole sector, like basic materials, or even a specific commodity, like gold, without having to buy a gold bar or try to pick the one winning company out of 100. So here's the fundamental trade-off. On one hand, you have an ETF. With that, you get broad, diversified exposure. It's simple, but your return is pretty much tied directly to the commodity's price. On the other hand, you could invest in a single junior miner that's a small, often very speculative exploration company. It's basically like playing the lottery. The potential upside if they hit a major discovery is absolutely enormous, but the risks are just as extreme. The chance of failure, of mismanagement, or just digging and finding nothing, it's incredibly high. And that massive risk that comes with miners, well, that really deserves its own section. Because before anyone gets totally swept up in this big geopolitical story, it is absolutely crucial to understand the brutal reality of this sector. You really can't put it more bluntly than this. This famous quote from the late, great Charlie Munger, it just perfectly captures that deep, deep skepticism that seasoned investors have when it comes to mining stocks. It's a world where promises are everywhere, but profitable outcomes, they're pretty rare. So let's break that quote down with some hard facts. If you're an investor in this space, you are walking through a minefield of risks. First, you've got faulty information, where companies' claims about what's in the ground just don't pan out. Then there's excess leverage, huge debts that can wipe out shareholders in a blink, not to mention a long history of capital mismanagement. And of course, you get these speculative frenzies where hype, not fundamentals, drives the stock price to the moon before it crashes. It's really no surprise this has historically been one of the absolute toughest sectors to make money in. So we're going to end right where we began, with a question. The risks of investing in this space are obvious. They are severe. But given this undeniable shift towards a world where access to these minerals really is a matter of national security, maybe the risk of ignoring this massive trend is even greater. In a world that's breaking apart, what's the right move? That's the billion-dollar question. Thanks for joining me.